Hey folks, welcome back. I'm sorry to disturb you again. I had to go outside, but I didn't go outside, and I was watching ICT's live, and it is near about 3 hours long. So I thought that tomorrow is the weekend, so I can watch his video tomorrow, and I can make the summarized video, the wizard version. So I was watching the chart, and I was feeling like I'm tweeting a lot. So I couldn't stop myself to come here to talk about this price action. If you feel that like I talk too much or it's over it's more than over, then just leave the session. I would love to spend little time, then I'll close my session. I hope that everyone is cool. Here by the way, I need to close the execution. Okay, I don't need that one. This is the area where market has taken that buy side liquidity. You can say that it has made the liquidity. Yeah, it has made the liquidity. At the same time, it has taken that high. This is the highest fair value gap. So what should it do? It should tap over here, then it should keep going higher. What happened? It is working as an inversion fair value gap. Market came back again over there. What else do I see over there? It is above this weekly range high. Okay, remember this is the weekly range high. So market went above this weekly range high. In Friday, whenever I see this, that market went above the weekly range high. By the way, can you hear me? Let me check actually you can hear me or not. Hello, hello, hello. I guess you can hear me. If there is any problem about the sound, let me know that. So whenever market will go outside of this range here, outside of that range, I will start to look for sell. Here, that was the last fair value gap. If you remember, that was the last fair value gap. I told that if market can go above this last fair value gap, then I will start to look for buy. So let me check the color. I will start to look for buy. But at the same time, I told that buying is not good for me. That means I won't feel like I would love to take the buy. So I really don't want to take the buys. I let all of this thing go. By the way, it was inside the lunch hour, so I didn't just to do anything. I was watching ICT's live around that time. Then I came back and I saw that market is now respecting this 50-minute inversion parallel gap. Okay, you can hear me. Thank you, brother. So it was respecting that 50-minute bearish parallel gap. What else do I have? Range. This is the high, that weekly range. Market went above this one. It should fall. How far it can fall? I didn't know that. To be honest, I really didn't know that. If you see over here, I had this relatively equal lows, this low, and all of this lows. So I have tweeted in short that market is going to take that sell side liquidity. Below this, I have this relatively equal lows around that area from 1 minute chart, and obviously I have this bullish parabolic gap from 50-minute chart. This is the bullish parabolic gap. So I have all of this run, and market actually took this liquidity trade until the 50% of that bullish parabolic gap from 15-minute chart. Now price is over here. Then I have tweeted that this week 50% is going to determine my bias. What do I mean by that? First, market is holding this bullish parabolic gap. I'm just going to remove this parabolic gap because I really don't need that one. First, this bullish parabolic gap is holding the price, the upper portion. Market is at the upper portion, but over here there is another problem. This week 50%. Why that specific week? Because this is the week which is like immediate rebalance. Okay, so all we know that if there is a week which will go higher and then it will come back, it is going to be the immediate rebalance week. But I am using the same thing in the opposite way. Now if you ask me where ICT talked about this, I don't know if he still talked about this or not, but trust me brother, today or tomorrow he will talk about this. I really don't know he already talked about this or not. I mean, yes, previous week, okay, previous week 50%. I really don't know if he didn't do it. He will talk about this today or tomorrow, trust me, because it is a very important week which is like a rebalanced week. That means this is the whole price range which is absolutely balanced. Okay, at the same time this is a gap. This week is fully a gap. So I am seeing that market is holding this bullish parabolic gap, is holding the price. That means it should go higher. It should go higher. At the same time, I have this last parabolic gap, inversion parabolic gap. It can stop the price, send it back lower. So what should I do? until price is inside this range, I don't have any way to trade. No way to trade until this constant encroachment to that specific constant encroachment. I know guys, it's little difficult. I mean, the way I talk always, it's not like that way. How how long should we stay in, in this small like fair value gap? We should go little advanced model, right? So though today is little difficult when I'm talking, I don't know what you guys are thinking, but I should provide this information. If you take the notes and if you keep watching this type of things, you will get an idea. So in this range, so I would love to mark that range. So from this constant encroachment to until this constant encroachment. So this range, uh, the way market will stay in this range from 15-minute chart, you have no way to trade. I told that this constant encroachment is going to decide my bias. Why did I tell that? If 15-minute chart can close above this constant encroachment, that means market is going higher. If this constant encroachment is going to hold the price, then market is going lower. But when market is going lower, how far it can reach? Until this constant encroachment. So this is a range where you are in a no man's land. Here you just don't have any opportunity to trade. So even if you go to your 1 minute chart, here is your 1 minute chart, maybe you find some kind of setup around that area. Okay, some kind of setup. I don't know if there was any setup or not. Maybe there was a setup. No, you can't push your button because market will try to break either this one or that one. It is actually struggling to break this range. How do I know this is broken? 15-minute chart will tell me that. Now, as some of you actually replied me, there was a hourly last fair value gap. I really didn't go to hourly chart. Even after seeing your comment, I didn't go over there because that inversion fair value gap was enough for me to decide that sell. Okay. And JD Capital, I don't know you are here or not. Let me check. You are here. JD Capital, you are here. You told that there was a 1 minute setup. That was a very nice fair value gap, and everything was here, and that was a very strong sell side liquidity. I don't give a shit. I don't care how beautiful the setup is from 1 minute chart. If there is no higher time frame present over there, you can't push your button from 1 minute setup. 1 minute setup, if you ever see this or if you ever look 1 minute chart as your setup chart, trust me man, except Wednesday and Thursday, obviously except Wednesday and Thursday, other days, that means Monday, Tuesday and Friday, if you look 1 minute chart as your setup, that is disaster man, to be honest. So never ever, I don't care how strong that liquidity is, how strong that liquidity is, I don't care. All I need to see, is there any higher time frame point of interest or not. Now my higher time frame is 15-minute chart, but hourly chart is also acceptable in rare case. So that's why I tweeted that this constant encroachment is going to determine my bias. That means I don't know where market will go. Here I knew that market is going for that some kind of sell side liquidity, any kind of liquidity market is going for that. But when it reach over there to that specific bullish parallel gap, why this bullish parallel gap is important, brother? You always mark some kind of parallel gap that is worthy to mark to that specific leg. From here to here, this is a leg, right? In that specific leg, you have the last fabric gap over there. Let me actually clear all of this thing. I don't need them as well at all. Here, look at this. What is that? Your last fabric gap. Then look, what is your entry fabric gap? See this fabric gap, this is your entry fabric gap. If there was any other fabric gap, I don't care about them, but this fabric gap is extremely important for me because this is the entry fabric gap which has the power to stop the price, send it until this buy side liquidity. At the same time, in the morning session, I told that even if it went higher, I don't care. And before reaching any of this parallel gap, if market take that buy side liquidity, I'll angry. I will be angry. Okay, it should not take that buy side liquidity before reaching any of this parallel gap, because if it can take that buy side liquidity, this is going to be the random reversal. Reversal reaction is something that is not going to take the liquidity. Reversal is something that is going to take your liquidity. So this random reaction can send the price until any kind of area over there. Reaction can send the price. What type of reaction it can be over here? There can be any kind of reaction. The reaction can happen from anywhere. Maybe it has made that sell side liquidity, or with any kind of weak or anything, it has made the sell side liquidity over there from the lower time frame, or maybe from the higher time frame, or anything. but that reaction can send the price until a certain level, but it can't take the liquidity. The buy side liquidity should not be taken by that random reaction. That's why I am still bearish. So one of another guy actually asked me what is my thinking about the PM session. Before outlining that sell setup, I told him that I'm bearish. I just told him I don't know he's here or not. I just retweet him that I was bearish. That was the reason for my bearishness. I am using some random concept, and that random concept is this is the random reversal. I don't believe in random reversal. Yeah, obviously it can happen, but one time out of 100,000 times, okay, that is nearly impossible. So I don't believe in this type of random reversal. Instead, I would love to see that market will keep going lower until some kind of specific fair value gap. So whenever market went higher, I don't need to participate in that price run. Instead of that, every single PDRA I will try to look for sell. Look at this concurrent crossment. See this random reaction from that random level. The random level is going to decide is really market would love to go higher again or not. If it hold the price and send it back below this concurrent crossment of that bullish fair value gap, I'll be over sure that market is reaching for maybe until this last fair value gap, or maybe until this sell side liquidity, or maybe until here. It doesn't need to go anywhere over there, but it can go. It can go for that one. It doesn't need to reach to that fair value gap by today. No need to reach over here by today. But it should not take that buy side liquidity before reaching any of this fair value gap. I would love to say that I can be wrong. Okay, market can take that buy side liquidity. I can be wrong. Even if I'm wrong, by thinking that simple concept, I will be able to catch a lot of sell setup. I will be able to catch a lot of sell setup. That is my point. Even if I am wrong and market take that buy side liquidity, in the meantime, I already took a lot of sell and I'm already profitable. I don't care about the closing, where market is going to close today. Either way, today is the hardest day. I prefer trading after 240 in Friday. So after 240, that is the wizard zone. Not always, most of the time in Friday after 2:35 to 2:40 p.m. I started to look for trading. So here, this is my area where I will start to look for trading uh, in Friday. Okay, so that was the thing. I don't know you guys got the point of that consonant cosmet, how it is going to determine the bias. Is it clear, brother? Look over here. Maybe some of you are seeing that market has taken the buy side liquidity or something like that. Then this is the market structure shift, fair value gap. You are going to take the sell from there. I don't care. Even if it keep falling, I really don't care, because I need to see that this consonant crossment is going to hold the price, send it back below this consonant crossment. That means body will close below this consonant crossment. Then I got the point. Okay, this consonant crossment of that specific week has decided the bearish bias. If market failed, closed below this consonant crossment and went higher, closed above this consonant crossment, I would love to see that it will work as a support. That means market will close above that consonant crossment, it will tap to this consonant crossment, then it will keep going higher for the buy side liquidity. But brother, you told that market is not going to take that buy side liquidity. As I told, I don't expect that thing happen. That's why I'm bearish. But if it happens, then obviously I'm wrong over here. I can be wrong. I'm a human being. I can be wrong. Okay. But most of the time, I want to be right. Like 95% of the time, I want to be right. So I got a lot of troll actually last time when I talked about this type of random reversal. Uh, I got troll, and then finally we find out that it has traded the 50-minute fair value gap. If you remember, at that time Harman was over there. He is the guy who made me to tell this random. But whatever, I don't believe in random reversal. Now you can put a lot of things over here. That market has traded some 4-hour fair value gap, daily fair value gap, as ICT has shown us that it has came to 20%. Okay, 20% of the weekly range. Also, he has shown that opening range, upper quadrant, opening range. Okay, not opening range gap. It was opening range, upper quadrant. That can be the PDRA. Maybe I never see those, but I don't like those type of things. I need something very specific from 15-minute chart. Very specific. In that 15-minute chart, this is the last fair value. This is the last fair value gap, entry fair value gap, first fair value gap. It can reach until this first fair value gap. Then another leg to that specific leg, last fair value gap, entry fair value gap. Anywhere market has to reach any of these three fair value gap. Until then, I will look for sell only. I don't care about buy down. Okay, so all of this buy down, I really don't care. And if you remember this inversion fair value gap, I just closed my stream around that area. That was the inversion fair value gap. I talked about this inversion fair value gap. Yeah, I wanted to see that market will reverse from this fair value gap, see upper fair value gap, but that doesn't mean it can't reach until this inversion fair value gap. So it has reached to this inversion fair value gap. Am I going to frame this trade from my 1 minute chart? I never frame my trade from 1 minute chart. I need my higher time frame point of interest. Here, new day opening gap is my higher time frame point of interest. It is respecting this new day opening gap as a support. Tap to this new day opening gap, we did the damage until the inversion fair value gap, boom, until that relatively equal highs. Obviously, you can read the price and you can frame your trade from 1 minute chart, but that needs more experience, which I don't have. I don't have that much experience to frame my setup from only 1 minute chart. That's why I have added this high time frame. That means the 15-minute chart for better understanding of this market. Okay, so guys, whatever I'm telling, this is my experience. It doesn't mean that you won't be able to trade from 1 minute chart. Okay, it doesn't mean that. Maybe you know better. Okay, so you will be able to trade by 1 minute chart. I'm sorry, JD Capital, because I was just talking freely with you. I just told that no setup is valid from 1 minute setup. You need the higher time frame. Okay, it was just a fun. Obviously, you can frame the setup from 1 minute chart if you really know what you are doing. So for me, it is difficult to frame the setup from 1 minute chart. That's why I always prefer uh, 15-minute chart or hourly chart or higher time frame. I hope that you will understand the part, brother. So guys, that was the thing I wanted to talk here. One guy actually asked me, can I use the volume balance for the 22 YT model? For example, market structure sheet, there is no fair value gap, but I have a volume imbalance. Can I use that volume balance for my sell setup or buy setup or whatever it is? Yeah, obviously you can do that. I can't tell you that no, you can't do that, because volume balance is one of the PD array. Though it is the weakest one, but still this is the PD array. You can obviously use that volume balance, but for that I believe that you need more experience. That means maybe 5 years you are seeing that this volume balance is working. So 5 years after watching the same thing, obviously you can push your button from there. But if you just started to learning this ICT, maybe you have a 6 month or 1 year experience, it is not recommended to use the volume balance for your entry opportunity. Still, if you ask me, I don't understand which volume balance is going to hold to the price. I really don't get that point. Sometimes I get right, sometimes I get wrong. There's nothing wrong to tell the truth. Okay. Okay, that was the thing. Obsession beats talent every single time. Excellent explanation. What you are talking makes absolute sense. It's pointless to enter a trade when is consolidation. Thank you, brother. So this is one of the way to understand the consolidation, when you are going to expect the consolidation and when you are thinking that market is going to fall. So here, when this setup create, yeah, I was wrong over there. To be honest, I was wrong. Okay, so let me actually tell that I was wrong. Just for showing off. Okay, that was just for showing off. See this candle? That was my order block. So I just marked that one, the low actually. That was my order block. Here, I'm watching over here in this 50-minute chart. What is happening over there? So right now I don't have any opportunity to trade around that area. So I'm waiting to see, is market going to fall or is market going higher actually. So I'm just waiting for that price action. At the same time, let me actually explain this setup. So this is the order, that was the order block, and the mean threshold of that order block. I'm not going to mark the mean threshold because you can see market went higher. That was the fake breakout. Though I took my sell from that order block. So that was the first entry over there. My stop loss was here. See this high? around that area. This candle has made this fair value gap. That high was my stop loss. Now later you saw that market is my stop loss is over here. I put it later over there, but that was my stop loss above that high, which has made this fair value gap. And look at this relatively equal loss. So from there and until there, okay, that was my target. Now you can see it is not even 1:2. I mean, risk to reward ratio. Uh, risk to reward ratio 1:1.75, not even 1:2. So it can be a bad trade for you. But excuse me, it can be a bad trade for you. You can think that, okay brother, I don't want to take that entry because it is not even 1:2. Whatever, it is your opinion. I'm just explaining the thing over here. So that was my order block. I didn't want to see that market will close above that high. I didn't want to see market will go even one tick above that high. Now if I were trading with my real money, my stop loss would be there exactly above that high. That would be my stop loss, maybe little below or little more below, just above that. What happened? Oh man, just let me put it in the same time. I'm sorry. Okay, here, that would be my entry, that's for sure. And you can see that I got stopped out. Now when I actually got stopped out in this type of situation, I take re-entry to that specific fair value gap. See this fair value gap, I actually take re-entry, and as you can see here, I took the re-entry over here. I mean, I added over there. This time I put my stop loss over above that high. The candle has made this fair value gap. I don't do that. To be honest, I don't do that. Why I don't do that? Because if I'm wrong, I'm going to get a huge loss. So what I will do, I will put my stop loss over there, and I will take a small loss, maybe for 5 handle. I will take a small loss for 5 handle. Then I will take re-entry over here. Whenever I will get another opportunity, I will take re-entry to that specific period. Maybe in that type of situation, I actually take a partial over here, and then I hold my trade for so long, little longer. But this is the truth. This is my way to trade. I only just put my stop loss over there, and when this candle has finished and went lower, just went lower, I put it just above that fair value gap, not above these candles, above this fair value gap. Then market came here and I took re-entry over there. Here there was the propulsion block around that area. I tried to take the entry to that propulsion block. Everything went through this, come back again to this order block, added one more, and then here finally add one more. Market went lower. If I were trading, I got stopped out over here, that's for sure, around that area. Then I took re-entry over here until maybe in that type of situation, I actually, when I get stopped out, I try to catch little longer run. This is my way to trade. Here I was wrong because that run I didn't expect that run. But later I find out that I didn't see, I mean, mark that inversion fair value gap because I had a lot of lines over there. So I didn't mark that inversion fair value gap. Later I find out that market has actually tapped the low of that inversion fair value gap one more time. Is that wrong? Absolutely not. That is absolutely correct. So I didn't notice this one. I'm a human being. Okay, you have to understand, I'm a human being. I didn't notice that it can reach until the low or maybe until the constant encroachment of that specific inversion fair value gap before taking the sell side liquidity. Sometimes I do mistake, but the things I'm trying to explain you guys, that is the part you should take. When and how, the way I explain this constant encroachment, maybe I will miss something. I can miss something. Okay, a lot of things I can miss. Later I find out that, oh, okay, there was that things, I shouldn't go for that. So you have to just take the part you are thinking that this is important. So for example, here, what do you say? Market has made relatively equal lows. Now market is going higher. Are you going to take buy from that fair value gap? Maybe it will tap to this fair value gap and it will go higher. Maybe it will take this high, but then finally that buy side liquidity. I don't care. I just don't care. This 15-minute chart didn't tell me that market is going higher. It didn't tell me that. This constant crossment is still holding the price. Until this candle is not closed, I'm not sure that market is going higher. If this constant crossment is broken, then I will start to think that, okay, maybe now maybe not 100%, maybe now market will go higher. For that, I need to see that this consolidated crossment is broken. Barcoding right now. What's that? What is barcoding, brother? So, do you understand the consolidation? How do I know that market is going to be consolidated? This is the way you should look for the market. Everywhere you will get this type of things. Everywhere. Whenever you will find this type of situation where market is inside two range, first this bullish fair value gap, is that a random fair value gap? No. Obviously, this should be a some kind of fair value gap that has some importance. You have this bullish fair value gap, you are seeing that the upper portion of this fair value gap is working, not the lower portion. What does it mean? That means this fair value gap is holding the price, and you have this constant crossment of that specific week, which is also important, which is holding the price. Where market is reaching for? Is it going to fall or is it going higher? You don't have any fair value gap around that area, so you should focus on that constant crossment. When it is broken, okay, it's broken, now you can go for the buy or something like that. Until then, no buy is valid. But at the same time, if it went too far, what you are going to do? I'm not going to participate in that run. Okay, look at this candle. See this candle, highest upwards body close candle here. This one, this is your order block. Why? Because it has traded that inversion parallel gap over there. This is your order block. It can hold the price, send it back for the sell side liquidity. It has that power. Lot of things over here. If you would love to add all of them, it's gonna be so difficult for you to trade. So what you will do? You will let it go, and you will take a chance when you will get something like this constant encroachment is broken. What I want to see, it will tap to this constant encroachment, then it will go higher. So I will wait until it come back again to this constant encroachment. Until then, I will keep waiting. When it will come here, am I going to push my button? Absolutely not. I will wait to see that if there is a setup now. Now I find out that okay, market is going higher now. It is nearly determined that market is now going higher. I got that confirmation over there. So what should I think now? That market is reaching for that in constant crossment. Why it should come here? The reaction from that order block. That order block will send the price until this constant crossment, then it will go higher. But brother, why you are not thinking that market is going to fall? As you told that market should not take that buy side liquidity, you are bearish. Because if you compare the fair value gap with order block, obviously fair value gap is the strongest one, because for being a order block it needs a fair value gap, but for being a fair value gap it doesn't need the order block. So fair value gap is always important, more important than any other PDRA, comparing with breaker block, order block, rejection block, MMXM, whatever you say, everything is useless comparing with fair value gap. What is the difference between macros and micro? Macro is the time. Every hour has the macro. Like 9:50, 10:10. That 20 minute is the macro. Then 10:50, 11:10. 20 minute macro. Every single top hour before the 10 minute, after the 10 minute, that is your macro. And micro is, you can see this is the mini contract. One contract is $20, and you have the micro contract which has one contract is equal maybe $2, something like that. I don't remember is it exactly $2 or not, but something like that. Okay, so that is micro, and macro is the time. Can you explain why that CE broken will give you confidence market is going higher? I have already explained that, Netk. I am having hard time determining bias. Most of the time I'm wrong, so I'm having a very hard time. I have already explained that. Okay, let me actually tell me one more time. Now, if you ask me where ICT talked about this, I won't be able to give you the reference, but I believe that if ICT didn't talk about this yet, he will talk about this later, today or tomorrow. The way he's repeating everything, whatever I told you. Like today he talked about 11:30. So the real lunch hour start from 11:30 to 1:30. That is the real lunch hour. So I told that I don't like to trade after 11:30. Not today, long ago. After 11:30 I don't like to push my button because the price is wild over there. I didn't know why, and ICT just confirmed that that is actually the lunch hour. So this week we actually see the immediate rebalance. For example, look at this candle. When this candle has created, then this candle open or here, went lower, then went higher. It has rebalanced that candle. Not 100%, still it has the fair value gap, but sometimes you will see that this candle will go until that low, and it will perfectly rebalanced the full candle, then it will go higher. So that is the immediate rebalance. If you see that immediate rebalance, that means market is extremely bullish. The the next candle week, here you are going to use the previous candle week. The previous candle week 50% is a fair value gap that is going to work as an inversion fair value gap. You should expect that as an inversion fair value gap. So if it is broken, that which I have seen here, that this week is broken over there. So what does it mean? That means this fair value gap is holding the price. Look, this fair value gap is holding the price. Why? Market is working with the upper portion of this fair value gap. Nobody has closed below the low, I mean below the constant encroachment or the lower portion of that bullish fair value gap, and this week has been broken over there. What should you expect? Market will tap to this constant encroachment, it will start to go higher. Now it went here, came to this constant encroachment, take that liquidity. All I need to see a higher run. If I get a higher run, I will try to participate in that higher run. How can I take participate over there? It can be a inversion fair value gap, it can be a 22 YT model, it can be a breaker block, it can be anything. Do you have a high time frame PDRA, brother? Yes, I have. Now I didn't talk about this before. uh, some of you can think that it is I'm complicating things. I'm not thinking like that way. I think that it's the time to talk little advanced model, as ICT is also explaining the advanced model in 2024 mentorship. So I should go little deeper price action. That is my thinking only. Okay. When it has closed above this constant encroachment, am I going to push my button from there? From there. Okay, let's push the button. Just push the button. Just think that market tap to this in constant encroachment, I pushed my button. My stop loss is, for example, just below this parallel gap. Okay, where I'm going to target maybe this high and that high, they are relatively equal highs. So I'm going to put my target over there. I'll tell you why I push my button. I'm just going to explain that. Don't get panic and don't push your button. Okay, this is the relatively equal high, so I'm thinking this is the buy side liquidity. Should I push my button over there when it tap to this inversion parallel gap? No, you should not do that. Why? Because you don't know before expanding higher how long it will fall. What it can do, it can reach until this last parallel gap. See, until this last parallel gap. So where should be your stop loss? Around that area. That should be your stop loss. Are you willing to put your stop loss over there just for that run? Are you willing to do that? No, brother, I don't want to do that. So what should you do? Just I'll keep it here and I will show you the another opportunity when I'm going to push my button. Here you will look for any kind of setup, anything over there. What can I think? First look over here what happened. Market went higher, that was the market structure shift, entry fair value, market tapped to this entry fair value. What is that? Order block. So this is your order block when market has closed above the order block level. The problem is here I won't be able to catch the order block run because look, after this candle there is another candle. See this candle? This candle has closed over there, so it has to close above that high to make this one as a order block. In that type of situation, these two will be my consecutive order block. Then and only then I will be able to push my button over here to that specific order block. If it doesn't make that one as a order block, instead it closed lower. For example, this candle is going to close over here. That is going to be my order block. So that will be my another opportunity push my button from that specific order block. I am not going to push my button over here, exactly over there when it tapped. I would love to wait for the another price action. What else can happen over here? One candle has just closed above this constant encroachment. The very next candle close below this constant encroachment. What does it mean? Fake breakout. If it is a fake breakout, that means still this constant encroachment is holding the price. It is holding the price. It can be the fake breakout. But how do I know that it is the fake breakout? I don't know. I simply don't know how you are going to think it is fake breakout or it is the real breakout. I have no idea. I have no PDR. I really don't know how to find out the fake breakout. So I actually depend on the price to see that is it a fake breakout or is it a confirmation of the breakout. If it is the confirmation of the breakout, though it close below this constant encroachment, the very next candle will close above this constant encroachment again. So you should not push your button over there. Why? Because you don't know how far it will retrace. Because in 1 minute chart, if this candle can come until that area, then it can go back again and close above this constant encroachment. In 15-minute chart, you will see a long wick, just a long wick until that area. Then body has closed over there, something like that. See this wick? It came until that area, then closed over there. You will be stopped out over here, or maybe your stop loss is over there below this low, or whatever you just put your stop loss. Whenever or whatever you why I put my stop loss over here, because I want to see. I'm just explaining why I put my stop loss over here. I want to see this is going to work as a breakaway gap. So here this is going to be your breakaway gap. Over here this is going to be your entry fair value gap. So it should not go until this breakaway gap. That's why I put my stop loss just below that volume balance over there. That's why I put my stop loss over there. I didn't put it randomly over there though. But you should not push your button over there. Why you are going to push your button? Because you don't know how far it can reverse, or is it the fake breakout or not. You don't know. That's why you will wait for the price action. How do I know that my market is going higher? Because if market really would love to go higher, it will give you the opportunity to take the buy. Look over here, it didn't validate that order block. See this order block, it didn't validate it. That means you are not going to push your button. Market never tell you lie. If and only if there is no news, market is not going to tell you lie. Or maybe you will wait to see this as a inversion fair value gap. See this fair value gap, you are going to wait to see if it can work as inversion fair value gap. That means you didn't push your button, you are waiting. So I got it stopped out over here, just for example. Okay, you are waiting to see if this thing happen or not. So you are not going to push your button immediately after seeing this thing. Now please don't start to think that I pushed my button. I just pushed my button to show you why you should not push your button over there. Okay, and now you will start to say, ah brother, you got it stopped out. Do you understand why you should not push your button over there? Even if you got that confirmation, you should not push your button. What is the reason? Can I push my button below this constant encroachment? No, you can't push your button below that constant encroachment. You can't push your button. Use this level the way you have used the fair value gap. You should not push your button below here. So if you get an PDRA above this constant encroachment, then you are going to push your button until some kind of buy side liquidity. If the setup create below this dotted line, no, that setup is not valid. I talk too much, right, guys? C means consequent encroachment. Is it boring? Tell me that, brother. Okay, is it boring? I talk too much and I have started to talk and I stopped right now. Do you only consider the CE on the 50-minute chart? What does the 1 minute chart see? Every CE is matter. I mean, every CE has the value. I am just explaining this price action. That's why that CE I mentioned. I'm not I'm not mentioning any 1 minute C, because 1 minute C is also important. You saw in morning session I have used that C concept over here to take a sell. Here I used that concept, that C of that specific week from 1 minute chart to frame a sell setup around that area, to that to take that sell. But here the 15-minute C is important. That's why I'm using that one. Now you have already an idea how you are going to avoid the losing trade, or how you are going to avoid this this consolidation. This is how you are going to avoid the consolidation. First you have to make sure that where market is reaching for. Is it going higher? Is it going to fall? Nobody knows that. I don't know. I guess ICT also don't know that. Nobody knows that. You should wait. Tito, if price would have validated the order block, then we could have entered buy side, right? No, you can't. If this is your order block, for example, this is your order block, this one, okay, because this is the lowest down close body close candle. No, you can't go for that order block entry to buy side liquidity. Why? Because this order block is below this consolidated crossment. But if that was the order block validate here, okay, yeah, I would push my button confidently that market is going for that buy side liquidity. If that was the order block, your order block. Netk, you have to watch my live. Okay, every day okay, just go and watch every day's live, every single day's live, the first part of that live. Okay, so from 9 to 9:25, every single day I explain the bias. Bias is not something I will tell you this is going to happen. I mean, some specific things you have to see, then you will understand what is bias, because bias is everything. If you can understand bias, you 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 will be the wizard of this market. So bias is everything, and every single day's bias is different depending on that specific price action, narrative, fair value gap, liquidity. Every day's bias is different, so every situation is different for the bias. It's not like some you will watch some video and then you will understand how to use that bias. It's not like that. I don't know. Yeah, there is some videos I know. Watch this video and you will learn the bias. I don't agree with them. Bias you can't learn by watching previous video. Like everyday's stream, I told please watch them. You won't understand anything from there. Even if you understand something, it will take a long or hard work to understand those. Okay, depending on the news, depending on the narrative or the days, depending on the fair value gap, depending on the buy side liquidity, every single day's bias is a new thing, absolutely new. One bias is not related with another bias, so you can't learn it by watching some videos. Okay, so look, this candle has closed above this consolidated crossband. The very next candle closed below this consolidated crossband. What do I mean by that? What do I see over there? Fake breakout. See, this one is the fake breakout. What should I think? Market has to go above this consolidated crossband one more time, and it has to close above that consolidated crossband. Then I will be sure that okay, this consolidated crossband is broken now. Now it is broken. Until then, I'm not going to take buy. I'm not going to take sell. Even if it go higher, take that buy side liquidity. I don't care. Yeah, in this type of situation, you can take a risk. What type of risk? Maybe market has taken this sell side liquidity. In case of sell side liquidity, there is a very nice market structure shift. There is a fair value gap from 1 minute chart above this constant crossment. You tap to this fair value gap, went higher to take that buy side liquidity. You can take a risk over there. Maybe there is inversion fair value gap. Maybe there is a breaker block. Maybe there is something above this constant crossment. For the second time, you can go for that buy, but that is risky. You have to understand that is risky. Can I take a sell over there by depending? Look, this is the area where you are not able to take the sell or take the buy. Nobody knows what is happening. This is called seek and destroy mode. You have this sell side liquidity, you have that buy side liquidity. See this how clean that buy side liquidity. Look, this sell side liquidity, how clean that sell side liquidity. See this sell side liquidity, how clean that. Which one is going to take in? When market was going higher, it seems like that market is going to take that buy side liquidity. When it is falling, it seems like that market is going to take that sell side liquidity. I don't know. Is it going to take that sell side liquidity? I don't know, because market is inside that range. Do you understand why I always talk about the immediate reaction? This is what happens if market doesn't do the immediate reaction. Okay, I was talking about yeah, I have already I have already explained that on SQ trades, I guess. Price again closed below the constant crossment. Now we will wait, see if price closed below the 15-minute bullish parabolic. See go shorts, or do we enter shorts now only from, no, you have to wait. You have to wait, okay? You have to wait. If market can close below this constant crossment, you will start to look for a sell setup. The way we are looking for a buy setup over here. See, market never give me a buy setup there. Never ever. It never ever give me the buy setup. Same thing we will start to see when market will close below this constant crossment. We'll start to look for a sell setup after closing below this constant crossment. Then you are going to start to look for a sell setup. After closing above this constant crossment, you will go and look for a buy setup. Okay. Trade para vidas toda. I guess, brother, you are new to my channel. That's why you are talking about. Yes. I don't need any other time frame, brother. Now, if you just join and don't think that I took that entry, okay? I just push my button. Ask other guys. I push my button to explain why I should not push my button over there. I started like that way. Why I should not push my button over there. So when market has closed above this constant crossment, though it seems like it is a fake breakout, but if market can go above this constant crossment one more time, and then if it make any kind of setup, it can be breaker block, it can be water block, it can be 22 YT model, it can be inversion parabolic gap, anything. I will start to believe that things, and I will try to take an entry until this buy side liquidity. Okay, but that setup, my entry, my pushing button should be above that constant crossment. Hmm. Can you do a top down of your idea? I don't have any idea, brother. It's not my idea. First of all, it's not my idea. It's a concept, and the name of this concept is ICT. The inner circle trader is MC, smart money concept. So this is the smart money concept. And it's not my idea, okay? And top down analysis, I try to do it every Sunday actually. Isn't it so obvious that market is going to take that sell side liquidity? So obvious. I am not convinced yet. Though I want to see that market will keep going lower. It should not take that buy side liquidity from 15 minutes chart on my right. It should not take that buy side liquidity. So what I should think, market should keep falling. But still now, I'm not convinced that market is going to take that sell side liquidity. What else you can think? That market has taken this buy side liquidity, failed to take that high. Failed to take that high, went lower, market structure shift, parallel gap, market is going to take that sell side liquidity. You will see this as a hindsight. As a hindsight, you are going to mark that. You are not going to push your button. You are going to mark that after effect. After effect. How? Depending on your bias. You know that market is should fall. Why? Because it is a random reversal. So you should think that market is going to fall again. Where? Until this parabolic gap. So you are bearish, but you are not going to push your button over there. When this candle closed above this constant crossment, you should not push your button over there, because you didn't know the next candle is going to close below this constant crossment. You didn't know that. Nobody knew that. So you are going to mark those line as a hindsight. This is the learning area, okay? Ah man, guys, can you push the like button? Little like, okay, if you want. I know I'm making you bored. This is the all logic. If you understand this logic, you will be able to do this type of things. I keep doing this. How do I know that it is going to happen? Like, just a second. Mark, not that one, sorry. Mark that level, okay? That was my truest tweet. Market has taken that one. If you watch yesterday's tweet a lot yesterday actually. Look, mark that one. It has been tagged. Go and check. It has been tagged. Mark that one. It has been tagged. I mean, if you are with me in my Twitter, you will see that I keep doing that type of things. How do I know that? When I get confirmation that okay, this is the time when market should fall, this is the time market should go higher, I then I tweet it. You will see that very rare I'll be wrong. Very rare. I'm not going to be right every single time, but more than 90% of the time I'll be right because I'm watching this type of things just from 15-minute chart, from 1 minute chart. That's all my time frame. I don't use any other time. Did I have one more doubt, brother? When price reaches our 50-minute last fair value gap, we usually don't care about the opposing fair value gap, right? So here we considering the bullish fair value gap. What is your question? When price reaches our 50-minute last fair value gap, okay? We usually don't care about the opposing fair value gap. Okay, yeah, opposing fair value gap, we don't care. So here why we are considering the bullish fair value gap, okay? First of all, market didn't reach to the last fair value gap here. I mean, though it has, sorry, not here, here. First of all, market didn't reach to the last fair value gap. Okay, this is the first thing. Second thing, time is the factor. What is the time right now? It is the very near to the closing of this session. Today this week session. If you don't care about the time, price won't will give you a shit. So this is the time where market is going to close with something certain. Okay, that means market is going to do something certain. It doesn't have the time to reach for this buy side liquidity. It doesn't have the time to reach for this sell side liquidity. So what should it do? It should make some kind of buy side liquidity or support, sorry, resistance, or it is going to make some kind of sell side liquidity or support or resistance. Okay, then after taking that liquidity, it should keep going that way. For example, if it take that sell side liquidity, it should fall. It should keep falling. If we take that buy side liquidity, it should keep going higher. So here time is the factor. Obviously time is a factor. Then there's some other factor as well, as market didn't reach the last fair value gap, and I am not thinking that this is the reversal, so market is going to take that buy side liquidity. I'm not thinking like that way. I'm thinking that this is the random reversal, so market should reach any of this fair value gap, so it should keep falling. So even if it reached some kind of last fair value gap, for example, it has reached some last fair value gap, but this reaction has created from that entry fair value gap. This is just for example. Let me clear this very specifically. Think that it has traded entry fair value gap or last fair value gap. Any of this fair value gap, market has traded over here. This is your buy side liquidity, and you saw there is a last fair value gap from 50-minute chart. There is your last fair value gap. Market came here until that last fair value gap. Clean buy side liquidity. You are at the last hour, I mean around 3 p.m. or something like that, around last hour, way near to that that buy side liquidity. What should you think? This last fair value gap is going to hold the price, send it back lower again? Absolutely not. This last fair value gap will give you a reaction. This reaction will send the price until some kind of area, then it will go through this last fair value gap and take that buy side liquidity. Remember, market always go for the liquidity, always go for the liquidity. After taking the liquidity, it needs a fair value gap to take some rest. So when it came here to that specific last fair value gap, from not a random level, from some kind of certain level, came here at the last hour, market doesn't have the time to fall and do lot of manipulation or this type of things. It doesn't have that type of time. It has to reach in a certain level. What is the certain level? That buy side liquidity. So this last fair value gap is going to be broken. This is a logic. This logic is depend on the time. Is that clear, brother? Let me know if it is clear. So it came here very near to this sell side liquidity, didn't take that sell side liquidity. What it is doing? Consolidating. Why it is consolidating? Because it is inside that range. This consonant cosment to that consonant cosment. But you are the wizard, send the market to any level. Oh, no man, I'm not the wizard. I am just I'm depending on this price action. So when market will break any of this range, then I will show you some magic. But until price is inside this range, I don't believe when market is falling that it is going to take this sell side liquidity. I don't believe when market is going higher to take that buy side liquidity because market is inside that range. It is going to make me fool. Every single time it is coming here, everyone is taking buy. Every single time market will go over there, they will take sell. I need the confirmation. Okay. Right now, I understand. Thank you so much for clearing. Okay, clearing all our doubts with patience. Tito. It's okay, brother. I try my level best. I don't know. I can make it so. I mean, understandable or not. Sometimes I don't understand what I'm talking because English is not my mother language. So I'm using some word that is maybe difficult for you to understand. Uh, I'm really sorry for that. English is not my mother language. Okay, if it was Bengali, maybe I would be able to explain the things more beautifully. Okay, and also my headphone, a lot of people are complaining again. Please change your microphone, change your microphone. I really don't know what should I do because this microphone is really so beautiful. I mean, Peter has sent me a really nice and beautiful headphone. Still, someone is complaining. I'm not seeing any kind of price action over here. Okay, I have just marked this sell side liquidity, that buy side liquidity. I know how long I can take entry until 340 44. Okay, until 344. After 344 or 345, I'm not going to push my button. So I'm just watching. And today's price action extremely, see this price action. That's why I told that Friday's price action is actually so difficult. But for me, after 235 to 240, I try to start to look for setup. But if unfortunately market is inside this type of range after 230 or 240, that day I surrender. I don't trade in that specific day because market is already inside a range. If it failed to break that range, I'm unable to trade that session. Yes, but where are you from? I'm from in this world, brother. You is understandable, bro. Never. Oh, okay. Thank you, brother, for telling me that. By the way, guys, this is all my experience. Okay, I studied ICT concept, and some of you are new here. I can see some new names like Mohau. Mohau. I didn't see your name, brother. Then trade para vida toda. I didn't see your name before, so I can see that some of you. Then Alex Pine. Alex Pine, not so new, but still you are new. Who else is here? Who is new? Let me check. Happy Chaudhary. You are also new. I didn't see your name before. Who else? Mojibur Rahman. Mojibur Rahman is not new because I saw your name before. James Passina. James Passina. James Passina. I don't remember. Kanan. Kanan is new. I don't know Kanan is still here or not, but Kanan is new. Isaac Costa. He is also new. Not very new, but still new. Now you guys can think that okay, this guy is telling everything. Whatever I'm telling, this is my all understanding about ICT concepts. Okay, so a lot of things I keep telling which ICT didn't tell. But if you believe me, in time you will see that ICT is repeating that as well. And that is my belief. Okay, so sometimes some of you ask me why ICT talked about this. You are wrong. ICT never talked about this. Why you are rebranding? Actually, I don't rebrand something. Okay, ICT also told that to study his concept, then make your own model. So there is nothing wrong in making my own model. The way it is working, why I can't use that thing? Like that London session. Not only ICT but also nobody in this world until now talked about that London session making liquidity. If you can show me one single video who has talked about that making session, sorry, liquidity making session is the London session, I will never come back in front of this chart again. Nobody until now. Now I talked about this. If you ask me where you got that point, brother, you are not the genius. You are just bullshit. I have no answer, brother, because that is my experience. I have seen that it worked like that way. Now I'm happy to use that one as it is working 95% of the time. Go and rewatch every single London session. Watch them. Everyone. Okay, I'm challenging you. Everyone except before the CPI, except before NFP, except before FOMC. These three, except before them, 95% London session you will see market is making the liquidity. Look, it came here very near to this sell side liquidity. Now it is going higher again. What should you think? Market is going higher? Absolutely not. What I will do, I will push my button over there. See this fair value gap? When it will go little above this high or exactly over there, I will push. Now please don't push your button. It's my request. I'll push my button over there. I'm going to put my stop loss above this fair value gap. My target is around here, that sell side liquidity. That is going to be my target. From it is not the inversion fair value gap because time is the factor here. Now what is the time right now? 3:40:34 is very near of the closing of this session. What should it do? What it should do? Lot of buys here. See, buys, lot of buys over here. Comparing with sales, lot of buyers are over here. They are thinking that market is reaching for that obvious buy side, obvious resistance level. I don't want them to be right. So what I should do? I should take a sell over there. They are taking buy, I'm going against them. Are you right over here? Are you pushing your button depending on some kind of concept? No. What is the logic over there? That everyone is taking buy. All of the people are taking buy around that zone. See this zone? They're taking buys. I don't want them to be profitable. At least not by today. So I am going to take the sell. My target is should be here to this sell side liquidity. There. Market should reach over here. What is the last line market can reach until this fair value gap? Until that fair value gap. So it after that it should fall. This is the logic over here. Now should you push your button over there? Absolutely not. You should observe the price and you should build your confidence. Is market working that way? Which one is market going to take? This buy side liquidity or that sell side liquidity? Which one market is going to take? When market came here very near to this sell side liquidity, didn't take that sell side liquidity, it is going higher. What do you see over there? Simply tell me, brother, what do you see over there? Aren't you see this is the strong support zone? Don't you feel like that? It is a very strong support zone. Don't you feel market is going for that buy side liquidity? I was feeling like that way. Market is going for that buy side liquidity. Should it go over there? If it go over there, every single person will be profitable. I don't want. If you are the market maker, what would you do? One, two, just two high, relatively equal highs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 lows over here. Do you want to let them be profitable? I don't want them to be profitable. Okay. I'm new here. Jack, you are new. Okay, that's cool. Gerson, you are also new. Not so new, but still you are also new. Okay. You have to stay at least, you have to give me at least 3 months to understand me. Okay. Just to understand me. After understanding me, then you have to understand the things I'm telling you. Otherwise, you guys won't understand me. Okay. You will see that, this guy is over trading. How many trades he took? Look from there. How many trades he took? See, he took some entries and then he also outlined some lot of entries. Okay, This guy is crazy. He's over trading. I'm not here just to show you my winning percentage. The way one guy actually told, I am going to count his winning and losing. I'm not here just for that. I'm here to express the logic why market should go higher, why it should fall and take this sales and liquidity, why it should come back here. Because of the time. Time is very near closing. It is very near of the closing of this PM session. It has no time to reach over there. If it go over there, all of these buyers will be profitable. I don't want to make them profitable. I want to I, I, I I want to see them. They will be jacked. They will be, you know, what how to explain this one. I hope that you feel what I wanted to tell over there. Boom in advance, irrespective to the outcome. Logic is absolutely one point. Thank you, Ski Trades. Easy Trades. Yeah, you are also new, brother. Jacked is the most newest guy. I'm kidding, brother. I'm new, but I have been watching your videos after the live streaming. That's cool, brother. Please don't rush. Okay, don't rush. Go slowly. I want to see here a fair value gap that will be unfilled. Just a fair value gap that should be unfilled. Any kind of, even if it is just two handle fair value gap, then that should be unfilled. That is my expectation. Why? Because market has to show me that it is heavy now. It doesn't have the time. If it failed to leave a fair value gap open over, this is logic. You have to understand, brother. If it wants to take that sell side liquidity, it should leave some kind of fair value gap open over there. That is kind of sign that market is going to fall. Okay, so if it is the fair value gap, let me actually mark it. I want to see this will be unfilled. One tick is unfilled, perfect, no problem. The whole fair value gap is unfilled, no problem. Until it has traded until that constant crossment, no problem. But it has to leave some area open over there. If it doesn't do that, wherever your entry is, you should close your trade. Why? Because market is not showing the heaviness. That means it can go back again because of the volatility. It can go back again for the buy side liquidity, for that buy side liquidity. So you should expect that unfilled fair value gap over here. That will tell you that market is going to take that sales. Not only this sales liquidity, it will keep falling. It will keep falling, not only taking this sales liquidity. What should I, for example, you pushed your button over there. For example, when it tapped to this parallel cap, you pushed your button over there. What should you do right now? See this parallel cap after closing this candle, exactly that candle. You should put your stop loss over there to that low of that specific parallel. That means your entry should be there, not here. Okay, your entry should be there. So you should put your stop loss to the break even, and you are going to believe that this is going to be open. What else can you do? You can put your stop loss just below above that candle which has made this parallel gap. This candle has made that fair value gap. You can put it over there because you are believing that this fair value gap is going to be unfilled. If it is unfilled, that means market will never reach until that high. That means you are in what to say? I mean, you are in the right way, something like that. Okay, in the right way or something. Your expectation should be executed, something like that. But brother, isn't it so? First trail my stop loss? No, it is logic. It is the logic to trail your stop loss. What is that? See this candle? Market should not go even one tick above that candle. See this high? Market should not go even one tick above that high before taking this low. Why is that? Because this is your order block now. Here, this one. It can trade the low, it can trade the open, it can trade the 50% of that candle. Nothing wrong. It can trade until the high, but it should not go one tick above that high before taking this sell side liquidity. That is logic. If it go, close your trade. Prematurely, that is not prematurely. Market is not working with the precision. What do you see? Market has taken all of this liquidity. What does it mean? Still there is liquidity left. See, this is new support zone. Another opportunity to take sell until market doesn't clear all of this area. It has to keep falling. It has to keep falling. That is logic, brother. See, still it didn't take the liquidity. This is the new support zone. It has to keep falling at least until the low. See this low? Until the low, it should keep falling. Otherwise, they are seeing this is a new support zone with this low, that low, new support zone. Oh, brother, take buy, take buy. Where? Until this buy side liquidity. Are you going to participate in this one? Now, maybe, for example, you didn't take the entry over there. You took entry over here. For example, this is just for example. You pushed your button over there. You know why you are pushing your button. Pushed your button. What should you do? Take a partial. How far, brother? Until this low. Take a partial over there. Hold your trade until that low. What is the logic for that? See this low and that low. Aren't they relatively equal lows? Absolutely. Aren't the support? Absolutely. Whoever took the buy over there, where is their stop loss? Below that low. So all your stop loss is below this low. All your liquidity is below that low. Every liquidity is below that low. Let me mark that low. See this one? Your liquidity is below that low, not below those lows. It's below that low. So it should reach below that low. That is obvious. If it doesn't go below that low, that means whoever took that buy, they're going to be profitable. That is logic. You have to understand this logic. Or rather, how do you know that it is going to happen? Time. Look at the time. See, am I done? Brother, you are done. I want to see it will tap to this low, exactly to that low, that specific fair value. Why? I need the precision now. What type of precision? Algorithmic price action. I want that algorithmic price action now. This is still a buy side liquidity. Whoever is thinking this low, they are seeing this low as a support zone. I want to see that they should be stopped out. Here, see this fair value gap? That is the entry fair value gap. This is the last fair value gap. Market has to reach either this entry fair value gap or that last fair value gap. It is going higher. Oh man, this is a new support zone. Look, take the buy. Oh man. Where did it came? Am I done? Yeah, I'm done now. I don't care where market will go. I really don't care. I don't know. Okay, if you ask me where market will go, I really don't know. But in my opinion, this entry fair value gap, last fair value gap, any of them should be at least triggered. Okay, any of them. So let me mark this. I can be wrong over here. Okay, don't judge me by this thing. I can be wrong, absolutely wrong over there. Okay, so until now, I am not wrong. See, entry fair value gap high. At least it reached until that line. This is the entry fair value gap high. Look, this is the high. Where did it tap? Entry fair value gap high. Oh, it went through this and came to this last fair value gap. This is the last fair value gap high, last fair value gap low. Where? Here. Why market is falling, brother? It should go for that buy side liquidity. I was thinking about this random reversal. That's why I was bearish. But brother, it was a bull run. It was inside the launch hour, brother. Trust me, it was inside the launch hour. I don't care about that. What happened in lunch hour? I really don't care about that. So I hope that guys, it was a little insightful. I decided to come live because if I wouldn't come live, then I would disturb you by tweeting a lot of tweeting. Okay. Unfortunately, I don't look like ICT's any son. Okay, he has three sons. So far I know. I don't look like any of them. So he doesn't know me. One day he will know about me. I really try to be precise. Okay, like ICT's. Also like him. I want to be, and trust me, brother. I never keep anything inside of me. I give every single thing to you, all of you guys, so that you can also do the same thing. So the thing I explained over here, remember that buy, why you should not go for that buy. What is the logic for this thing? Here, is there any concept over there? No, there is no concept except the liquidity and the time. What is the time around that area? 3:34. All of this buy side liquidity. Compare the buy side liquidity with the sell side liquidity. 1, 2. Just 2% took sell. How many percent took buy? Okay, guys. Anybody has any question? This is what happened when you guarantee graduate. So what is that? Graduate. Okay, graduate from ICT University. Well done, bro. Thank you, man. It has to complete the MMBM. Algo has a mission. Okay, Pablo. I am not a XM trader. I don't understand them clearly. To be honest, I little understand, but I don't get the precision, so I don't use them. XM, MMBM, SM. Okay, so that is my. I'm going to surrender. Where did it came exactly? Some random fair value gap. Random fair value gap. Below this fair value gap, what do you have? New opening gap. But still now, this is random fair value gap. I was just kidding, guys. 100% bro. He will find you one day. Hey, thanks, Shiva. Tito, I have gone through the fair value gap concept. What is the next playlist? Now, I really don't know what you have watched. Okay, if you have watched the study folder, you can't watch those videos. You have to study this. Okay, if you don't study them, it's not going to help you. What do I mean by study? You have to watch one video, you have to take the notes, then you have to come to this chart, you have to observe the chart, the same thing. Is it happening almost every time in a week? At least 1 week. One video you have to spend 1 week. This is how you are going to study them. If you don't do that, then watching Netflix is not going to help you. By the way, if you have watched already the ICT for study folder, then you have to watch the narrative folder. If you have watched the narrative folder, then you have to watch the parallel gap concept. Is that parallel gap concept? Maybe, brother. But my head is not working today. To be honest, after watching all of this price action, if you go to my YouTube channel, my pin video. Okay, there is a pin video over there. I have already explained what you should. What you have to watch. To be honest, my head is not working. Okay, because I was in deep price action today. That's why. So guys, do you understand the consonant crossment? That was my intention to come to this specific live. Why this consonant crossment is important? What is the importance of that consonant crossment? That was just a fake breakout. One candle close above this consonant crossment, the very next candle come back and close below this consonant crossment. That was a very specific thing over there. So if you get that, I hope that. So DB, please watch that one, brother. I really my mind is not working. Okay, that's awesome. Tito, you are most welcome. You are the wizard, and pretty sure ICT is going to watch you someday and feel very proud of you. Thank you, skaters. Kaboom. Thank you, Cyprian Sawa. You are also new to my channel. Thank you, Kasas. Mm, study folder, narrative folder. Yeah, study folder, narrative folder, then parabolic concept. After that, weekly analysis video. Also the macro folder. Uh, what else? Brother, my head is not working. Okay, please watch that pin post. I hope that you will get your direction. Just remember these two parallel, these two line. Okay, this is the random parallel gap, a very random parallel gap. Just keep that in your mind. I don't care what is going to happen right now, but look at the reaction from this random parallel gap. I will close my session around 4, just around 4. Okay, just what to say? Bear me next 8 minutes, then I'll close my session. I'm not going to disturb you a lot today because tomorrow is the weekend, and you should enjoy your weekend. Okay, I'll be eating your videos all weekend. You are the man. You have to study, okay? If you just keep watching them, yeah, it's not going to help you. I always try to express that you have to study them, not just watching them. Happy I subscribed a few days ago. Yeah, Pablo, not very new. I mean, not very old, but new. Still, you are new. Pro trader Pat. Hey man, after a long, Mama. How are you, Mama? How are you, Mama? Shiva, are you still here? Pro trader Pat is here. Another wizard of this market, guys. Any someone was talking about the MMXM. I guess Pablo, you are talking about this. See this guy with a bull something in his profile picture. Name is Pro Trader Path. If you watch his channel and over there you will find the MMXM. Okay. Until now, I'm not telling this because he is my friend or something like that. I'm a very selfish person, to be honest. Okay. I don't care about anyone else. But until now, if there is one person who has convinced me about the MMXM, except ICT, that is that guy, Pro Trader Path. I was really surprised and I was really feeling like, okay, let's start the MMXM. But to be honest, later I didn't get any free time, so I was not able to study the MMXM. Uh, to be honest, that is why I signed over there. But this guy has explained that MMXM so easily, and just watch it, and if you like it, then you can study it. Okay, it's up to you. But if any of you are interested about MMXM, please check his channel. The name is Pro Trader Path. Okay, definitely got to study up. Yeah, thank you, Easy Trades. Don't close it. Keep it going and come back once you wake up. I'm doing great. How are you? I'm cool, man. I'm cool, man. My head is spinning today. Okay, just outside of that, everything is cool. Just happy to see you both here. Yeah, Shiva, thank you, man. So I still one of your subscriber, Protector, but I still Shiva. I'm just kidding. Okay, guys. To be honest, I will close at around 4. Okay, I just want to see how this uh market is going to close. That's all I want to see with all of you guys. Then I will close. And yeah, I will make the ICT's video episode 10 tomorrow because tomorrow is the off day. I'll make that tomorrow after watching his video. I am not in rush because we have 2 days off. Okay. By the way, just realized, here you go. What did you realize and what do you want to go? Okay, guys. So remember this fair value gap, a very specific fair value gap. Now I don't know, is it going to reverse from this fair value gap or that fair value gap? I just don't know that. If you watch both of these fair value gap, you will find something very good. Okay, so let me mark both of them. This is the last fair value gap. I'm just going to mark the entry fair value gap as well. You will, I believe that you will find something good over there. Okay, so I'm going to mark that entry fair value gap. Don't make me wrong, don't make me wrong. Little wrong maybe. No, um yeah, I'm absolutely right, not wrong. Okay, not wrong. Look, this candle just closed inside this entry fair value gap. How the body is respecting from this entry fair value gap and how it is trading the last fair value gap. This is the fun, man. This is the fun. Someone has taken the membership. Who is that? Okay, Mama, what is that, Mama? But thank you, man. Thank you for that membership. Just don't forget to give me the penguin. My penguin, okay? How's enough at the okay, Felix, I didn't understand what did you say. It's something in another language where it is reaching for until those people or these people. See these two people? Whoever took the sale over there, they are still profitable. They thought that okay, I'm going to take the money to my home. But if I were the market maker, I wouldn't let them be profitable. I wouldn't let them be profitable. Here, this one, see? Oh, sorry, let me remove this one. These guys, I didn't want to let them profitable. But before that, I reached until a certain level. Fake breakout, fake breakout. History repeats. History repeats. Haha, me too, brother. Pablo just subscribed to ProTrader Path. Okay, that's cool. See, he's also stealing my subscriber. I'm just kidding. Titan AK are the best teacher ever I found in my life. Thanks for that compliment, man. Okay, so I have just okay, brother. You are going to wrong over here. It's not going to take that buy side liquidity. This buy side liquidity is not going to be taken. If you want to say me that I'm going to be wrong, then please watch the morning session first. Everything I explained in morning session, watch the PM session, watch that tweet, then whole price action over here, and then come back and tell me and judge me, okay? I am really surprised when I saw that. Oh man, Felix is requesting videos in French. Oh man, I don't know French, okay? I really don't know. Thank you, bro, for that penguin, for that bull, that for bear, that for boom, that for wizard. Thanks for everything. Thank you, mama. If you are free, I can call you, okay? I'm just going to close my session. It's been a long, we don't talk. So if you're free, just let me know, I'll call you. If you would love to sleep, then obviously I'm not going to disturb you now. So thank you guys for being here. টিটু এবং একে সেরা শিক্ষক। শিবা, you know Bengali or you just translate it? Eke is the best. Eke is the best. Okay, he's really good. I am a fan of his MMXM model. I'm a fan, okay? But I'm not telling you to be fan of him. I am just asking to watch him, watch his video. Then if you like it, obviously you will be a fan. If you don't like it, then don't watch him. It's a simple thing. Bro, can help me understanding ICT better. That was a nice comment, brother. I really don't know. I will be able to help you or not. But if you keep coming, I know that you'll be the wizard. You know what is going to happen in this market. But if you are in rush and if you don't come every day, I don't know. I'll be able to help you or not. Okay? You can got nothing to do. Okay, man. I'm going to call you because I would love to close my session right now. So if it doesn't take that buy side liquidity, I'll be wrong. Okay? Then please leave me, unsubscribe me, unfollow me from my Twitter because I tweet a lot. I do a lot of streaming. So please, okay, just unfollow me. Time to study for me. See you guys on Monday. See you, brother. Just woke up. Okay, brother. Don't 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 talk about those photos. Okay, I'll kill you. Which last video? Garson Casas. Which last video? What do you mean by last video? I was telling extreme YT here to you that please come. Oh, okay. I was talking about the guy Pro Trader Path. You see this guy Pro Trader Path? Just go and watch his MMXM model. Pro Trader Path. He's commenting. Okay. Okay. Good night, JD. Good night, brother. Good night, man. See you guys. See you all. I hope that you all will enjoy your weekend. And thank you, Tito, having a great weekend. Lots of love to you, brother. Have a good night. Yeah, good night, SK Trades. Just don't forget to give me the likes before leaving this stream. So until the next video or stream, extreme, cheers.